Wealth Builders is I once again your private money syndicator Nick Billions, here bringing you another private money drive-by real estate educational video brought to you from the Mills Funding Group LLC, an apartment acquisition and asset management company. And today we're going to discuss one of Mills Funding Group LLC's proudest accomplishments, which is building a credibility and track record behind their private lending program. So today we're going into the flesh of the credibility of what the program has created. Now, as always, got disclaimer, I'm not a lawyer, CPA, or securities professional. This info is purely based off of personal experience and opinion and should be consulted and verified by your attorney or CPA before moving forward with any mentioned investment strategies. Now, this information is purely educational and not intended to present or market any securities opportunities. Now, first we want to just jump right on into it and just give you a chart to show you the return on investment by the year. And we want to do some comparisons because we can do the numbers by ourselves, but we want to show you how they leveraged up against other top national investment securities throughout the years for the last 8 years that we've been in syndication and in business. And as you can see, the markers with the diamonds is our real estate versus the squares and triangles, which are the CDs and the multi-year guarantee annuities, which is one of those investment strategies that mostly the affluent knew about, but not many everyday middle class, blue collar and white collar workers knew about. So, but they also provided great returns, one of the best investments during this time as well. So just to show you is that we started off by just really getting into the game, and just what we do, we competed with what the other investments did, and we were able to give our initial passive investors a 3% annual return for the first 2 years. And then back in 2007, once they gained more confidence and rapport with us and doubled their investment, we were able to provide a deeper investment strategy, just scale it out what we were doing, and give them a 5% return. Now, moving on to 2008 to 2010, they doubled up their money again, because as always, as you build up your rapport and credibility, the pockets are just going to keep opening, and it's just going to flow like water. And we were able to jump into a very dominating niche in real estate and become passive investors and become debt partners in a multifamily portfolio, because as the boom crashed and as the credit boom crashed, as everybody were losing their houses, all owners were now becoming renters. So that means that they needed some place to stay, which they didn't own, which were apartments. And we invested in that greatly and received a 12% annual return, while at the same time we were giving the investors monthly cash flow from our simple buy and holds that we had during the previous years. And after we received our 12% return back from the investments, from the multifamily investments, we were able to maintain a 10% investment in our buy and hold strategy, which is still dominating today, and it's something as one of the few investment strategies that we offer our clients and that we offer potential prospects to get involved in. Now, showing here, we show you what type of money we were working with, to let you know and to kind of connect with you, as to say that what they have is what you have. These weren't very affluent people. They were hardworking people just like everybody else, and they saved just like everybody else, and they agreed to put their money into a simple interest-based account just like everybody else. They just kind of got smart and took their money out as they were starting to see the markets drop and other people complaining around them, this, that, and the other. So they jumped into real estate. They jumped with us. They found out what we were doing. They believed in our idea. They believed in our program, and they started off for the first 2 years with $25,000. Then after that, from years 07 through 2010, we went to up to $50,000, and then doubled up in 2011 and beyond to today to $100,000. Okay, and just here a few notes from the charts you just saw, that our track record and case studies involve one successful passive investor. That is it, people, just one. Okay, just imagine what we can do with a pool of investors all into one big deal. Upon keeping up and competing with other investment securities. We simply dominated with popular real estate investment trends over the years and were successful in avoiding any overall annual decline in ROI. Okay, so that was a very happy look on the investors' face when we were able to tell them that we didn't lose their money not one time. Okay, and the trends were dominated simply by the following years. In 05 to 07 was the fix and flip era, where everybody were buying rehabs and they were making quick cash. But where they were messing up at was that they were only using one entity. We use several entities so that we can do income spreading, which was an attorney's advice. Of course, attorney's advice and a tax strategist's advice. They both mutually agreed on this, that we used several different entities and did fix and flips and did income spreading so that we can avoid any double taxation and capital gains tax, and also give our investors the proper return that we set out and agreed to give them. And from 2008 to 2010, we became passive investors as debt partners with a multifamily portfolio that we received from a broker that had an investor that was looking for investments to get into his property. And from 2011 to 2012 and beyond, really to this present day, we now participate in buy and holds, where we also use some of our single family residences and turn them into multifamily rooming houses to maximize our cash flow potential and to increase the scale at which we can offer a higher ROI as well. Okay, now with our ironclad investment strategy, we created these returns on an annual basis from 2005 to 2006, 3% per year, 2007, 5%, 2008 to 2010, 12% per year, and 2011 to 2012, 10% per year. Now, for our angel investors out there, we were able to achieve a 67% annualized return over 8 years of investing. And for all passive investors, we simply averaged that down to 8.46% per year in a return on investment, whereas all the other investments didn't go any higher than 5, even if they wanted to. Now, with these results, our system can simply adapt to any trend that emerging markets accept. Now, our system is also proven to scale and increase ROI on an annualized basis from a simple $100,000, $1 million, $10 million, even $100 million investment. Yes, we're committing ourselves to saying that we are the company that can take that investment and properly manage it. Okay, all without becoming a giant REIT that give you these minuscule returns. We simply diversify and dominate. Then we give you the safest retirement solution with the highest returns. Now, for more of what we do and what we offer, you want to go to our homepage at privatemoney.VanEckCompanies.com. You want to go to our Facebook page at facebook.com/privatemoneysavior and our YouTube channel at youtube.com/Mills Funding Group. Again, this is another Private Money Drive-By Real Estate Educational video brought to you from the Mills Funding Group LLC, an apartment acquisition and asset management company. I'm your private money syndicator, Nick Billions, and I look forward to talking to you on the next video.